Hello traders, this is Rich from Tradesight. This is a look at our market preview for the coming session. This is going to be for Wednesday, Fed Day, October 29th, 2013. So we're going to get our the decision from the FOMC plus the all-important language and statement that comes with this tomorrow afternoon. That's going to make tomorrow afternoon pretty important. Also tomorrow morning we're going to be getting the ADP number for the month, which also could move the needle pre-market for sure. So got a couple of data points and some releases to look forward to. Today's session was kind of lackadaisical with a little bit of strength in the broad market, but really some pretty decent weakness in the Nasdaq sector, especially some of the high beta names. So we're up on the day in the Dow and the ES, but barely flat in the NQs. Internally, the market looked pretty much like what you saw there. Advanced declines were just barely okay at plus 700 issues on the New York side, but even though the market was kind of tepid, we were still plus about 500 issues on the Nasdaq side. So that's kind of a small win for the market internally. So no divergence, at least from the market internals. But let's get to the fun stuff. Let's move on and take a look at the charts. Let's look at the Nasdaq futures, the NQs first. Okay, so here's a look at the NQ futures. NQ futures made a new high on the move, basically made a new high close on the move too, but the important thing here is that we're still gaming this risk level from the seeker exhaustion, and we did settle below the day's open, which is always a negative, especially at range high. If we do roll to the downside, we're going to have first support at the 10 EMA, about 33.38. And then below that, we're going to have much better support at the gap window at 33.14. To the upside, the obvious sheriff in town is at 8/8 level at 34.37.5. Okay, so now on to the more relatively strong indexes. Here's the ES futures. ES futures made a new high on the move, made a new high close on the move, and importantly, did not close below the day's open. We actually made some progress to the upside and settled pretty much at the high of the day. Getting a little bit of distance here above that 1750 level. So the next level is going to be 1781.25. And if this move continues to power to the upside, the big level is going to be the plus 2/8 level at 1812.50. If we roll to the downside, expect first support at the 8/8 level at 17.5, and then the 10 EMA at about 1741, 1742. Moving on to the Dow futures. Dow closed right in the area of the active static trend line, which is also the area of this prior double top. So for now, we're still in this lateral trading range, which has spanned the course of many months. So we're still in the area of 8/8 and the static trend line, right up against range high. Very strong potential resistance area. If we do bust to the upside, we're going to start looking at the overbought territory here on the Murray Math box. Plus 1/8 at 15,781, and then 2/8 at 15,900, almost called 16,000. To the downside, we're going to have support at the 10 EMA, and then much more important support down here at the 50. TLT gapped down on the day, used the 10 EMA as support, but closed above the day's open. Still kind of feeling the effect of trying to work off this 9 bars to the upside. So no real move here either way to speak of. We do have you can kind of call it a little bit of a downward bias, but today's close decently above the day's open could flip that around a little bit. It's more of a neutral reading away from this downward bias. Want to take a look at a couple of the crosses that we haven't looked at in a while. Here's the SOX versus the NDX. We undercut the previous low here in this key ratio, meaning we're starting to see weakness in the SOX versus the NDX. We're starting to see a little bit of a bounce. We have a couple of days here with some upward progress, but could be definitely something for the bulls to work off of here. So this will be a positive development for the SOX. If not, we're going to wind up. You can see the head and shoulders potential here. Here's the left shoulder, head, and then right shoulder, and the neckline is right across here. So if this actually breaks and releases to the downside, we're going to wind up in a full-blown correction without a doubt. All right, one of the key crosses is the relationship of the cumulative advanced decline line, which is the blue line, versus the S&P cash, which is the red. You really want to see the advanced declines really working along with the average. When they start to separate, that's when you have to be on guard. We had a nice little push up here in the cumulative advanced decline line. That's the blue line. You can see how it's outperforming the overall S&P. We had this little turn to the downside, but you can see it was kind of short-lived and really reversed back to the upside. That was kind of forecasted by the relative strength of the advanced decline line. Then we just the opposite here. We started to see the advanced decline line start to roll, and that pulled the S&P down. You can see the S&P was trying to go higher, making this new high, but this was not in a position to continue because the advanced decline line was starting to lag. And we had this portion where we're starting to catch up here a little bit, but right now we're starting to see some little bit of a wider separation where the S&P cash is really starting to outpace the advanced decline line. So that means that there's fewer and fewer stocks that are really doing the lifting of the overall averages. And if this persists, this is going to be a problem for the market. But for now, they're both pointing higher, which is positive. But if this continues to widen out like this, this is generally a sign of a top. All right, one other thing to keep an eye on. Here's the total put-call ratio, which is still in kind of a neutral area. But if we get back up to this back down to this 0.5 area, that's that kind of reversal threshold where things are getting a little bit too giddy and a little bit too euphoric, and we're definitely moving in that direction right now. All right, so here's a look at the relative performance chart. We had a little downtick today in the XAU. A little bit more risk being put on here. The SOX had that pretty good performance. We're actually driving up near the old high. Pretty decent performance in the BTK relative to the sluggish activity in the Nasdaq, and the banks were higher on the day. So just kind of on balance, a tepid risk on day, if you will. All right, so here's a look at the sectors ranked from best to worst. Top gun, the SOX, starting to assert itself. The Internet Index bounced up after being almost last laggard yesterday. Cyclicals were decent. XOY was pretty high up on the list. The oil services had a pretty decent performance. That's all positive stuff for the market at this point. You really need to see the late cycle stuff kicking in for the broad market. The transports were a little lackadaisical today. I would have preferred to see a little better action out of them. BKX kind of middling, and the SOX was essentially dead last. A little bit of a source of funds type situation right there. All right, for a little wrinkle today, we're going to look at the charts with the Comer count on. Here's the SOX, the top gun on the day. You can see we got this 13 exhaustion here. It didn't reverse the market so much, but essentially just arrested the advance here for many months. Right now we're working on 12 days up. We're 11 up, and we're getting up towards that 12th day up. So we could definitely get that 13 up here in the area of +2 ace, which would be a real headwind for this advance. Here's the Internet Index, the IIX top gun today. We're 12 days up. One more push to the upside here is going to record 13 days up. Let's go back down to the bottom of the list. Here's the XAU. No real jeopardy here as far as any kind of a signal. We just finished 9 days up to the upside here, so there's plenty of room to go before we have to grapple with any signals. BKX is only 6 days up. We're going to find some pretty heavy resistance here at the 8 ace level at 65.5. When we get back up there again, Dow Jones transports are now 11 days up. When we get to 13, this has got very, very good extension. When we get to 13 days up, we're going to have probably a pretty good reaction to the downside. +2 ace level, 71.87, and that's also going to be very, very formidable and very strong resistance if we get up there from where we are right now. Take a look at the gold futures. Look essentially like the XAU. They actually just are a little bit behind in the count. The gold futures were the XAU was actually leading to the upside, so now we're 9 days up. Still hovering below 1375, which is that very important 8 ace level on the chart. And the oil futures starting to bounce back up a little bit. We're going to have a little bit of a problem here trying to reclaim the 200 200 simple moving average, especially where it coincides here with the 10 EMA to the downside. All right, folks. Well, remember tomorrow we've got the ADP number at 8:15. That's definitely a tradable event, and then we're going to have the FOMC decision at 2 o'clock. So it could wind up being barbelled tomorrow with volume, meaning there's going to be a bunch of volume in the morning, kind of a lackadaisical light volume, middle third of the day, and then probably a little better volume after the announcement at 2 o'clock. So be prepared for that. Good luck to you tomorrow. And as always, thanks for listening. This has been Rich for Tradesight.